So if I were to be honest with myself, I've been spiraling out for a while now, where I just haven't been able to find profitability. I've been strategy hopping, I've been breaking my rules, and I'm taking the easy route, to be honest. I've been funded before, and I've gotten multiple payouts. I'll try and edit them on here. And I've just come to the point where nothing else has worked, so I'm going to go back to the same strategy that allowed me to get those payouts. And the reason why I changed my strategy when it was already working was because I was too impatient. The strategy that I was using used like the daily 4 hour, and it was a lot of waiting around. And after I had those payouts, I was like, man, imagine if I can get it like this, like 3 times a day or something. So that made me go through a stage where I would change up the strategy and try use smaller time frames. Like for the past like couple months, I've been using like 15, 5, and 3 minutes, or like hourly 15, 5, and 3. And yes, it hasn't been working them. In the previous video, I've tested. I've tried out a different strategy. That's the video that's called testing new waters or whatever. But the more back testing I do, the more I realize how bad that strategy is. So yeah, I'm just gonna be honest with myself from now on, and I've gone back to that's the strategy that allowed me to get the payouts. Yeah, so to break it down, wrong button. I've called it. Well, originally I called it conservatism, but this is too long now because I'm back. Like I'm going back to it. So basically, the first step when opening up the charts on a Monday would be marking out nearby daily fair value gaps, order blocks, and previous day highs and previous day lows. And then I'd refine that on the 4 hour time frame, or keep those the same zones as a daily. And I'd wait for mitigation, so I'll wait for price to go into these zones, and then I'd wait for a market structure shift on the 15 minute that creates either one fair value gap or multiple. And then I'd wait for the 15 minute to I'll wait for price to retrace into those fair value gaps, and I'll drop down to the 5 minute time frame, wait for 2 in favor 5 minute candles. So if I'm wanting to be bullish, I'll wait for 2 bullish candles. If I want to be bearish, I'll wait for 2 bearish 5 minute candles. And then that's my entry. Once that second candle closes, that's my entry. And this will be more of a set and forget style, unless like a break even is like really necessary. Like if a trade were to run and like consolidate near my TP, I'd set to break even. But it's more of a set forget style. The TP will be at a desirable / realistic swing high or swing low, whatever, you know. And the stop loss will be set to where price would invalidate my trade idea. So that could range between like 1 to 1 to 1 to 2. 1 to 2 is the aim. Yeah, and these are just keys that I've always think would be good to follow. Like use the highest probability ones. Must be a 30% mitigation. Be wary of where I put my stop losses. 2% risk per day max. And these are just some self-help little notes, like make yourself a bit, yeah, you can read it. But anyways, I'm going to stick to that, and I'm going to refine that strategy the more I go. It's 2025, no more trade hopping, no more stuffing around, man. When I think about it now, it's so silly. I can't believe I left that the strategy that was making me money. But yeah, let's break it down. Let's apply it to the charts. So this afternoon. Oh, this afternoon when I got up. I got up in the afternoon. Yeah, I know, but I marked out this daily Fairvalue gap into internal range of liquidity. It's the same thing, IRR. And I marked out. Pretty sure I marked this daily out. And then previous day low, and then it was previous day high up here. Jump to the 4 hour. I refined this. It would have looked like this. So let's get rid of this for now. So that's the daily Fairvalue gap that I had marked out at first. So it would have looked like that. But I can see on the 4 hour that we got this little order block here, got this breaker block here. So I made it a bit bigger. So I refined it, and then that's my point of interest. And then price was like around here or something. It was like stuff around here. And then when we mitigated it, I jumped down to the 15 minute. Mitigated. And then I waited for a market structure shift. Good strong push. It's not the greatest one, but yeah, it's a good push that breaks structure, and possibly a change of character, which is all. It's basically it's called a market structure shift. That's what I call it. That's what I like to call it. And then so once that formed, it left this small 15 minute. So I jumped down to the 5 and found that there was a series of 5 minute Fairvalue gaps. So I marked it out. We had mitigation, and then we had 2 bullish candles after that, and then that was my entry, and yeah, went up to hit TP, and yeah, I'm gonna be trading demo again. So I've opened a 50k account because that's what I'll be buying once I'm profitable on demo. So right there you can see it's gonna be inverted, but yeah, 50k account. It's made 1k. Yeah. So yeah, it was a good trade. Good way to start off, and I'll make this work.